Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. Let's take a look at some charts for Setup Sunday. Not much going on, not much happening day to day, week to week here. Everything's going to sort of hinge on the tariffs on April 2nd. How much is priced in? How bad or not bad are the tariffs going to be? Are they going to be targeted? Are they going to be broad? How's the market going to react to that? That's going to matter more than anything else at the moment, just because there's so much uncertainty surrounding the tariffs. All that being said, weekly flows for BTC on the ETF side were positive last week for the first time in 5 weeks. A good sign for an early turnaround on the BTC side of things. For ETH, really nothing going on there. And ETH is kind of in some trouble because, as terrible as the chart looks, no one's really burning ETH. Now, we can say we're using ETH, the network, via L2s, or we're using Base or ARB or whatever, but they're clearly not paying enough. They're not renting block space enough. They're freeloading is what they're doing effectively, because whatever people thought would happen with the burn and the blobs is not happening. If we look at active addresses, also way down. Transactions, I'm sure, are fine, but other metrics also down, as they say here. New address creates, transactions, they mention daily volumes. That's not just an ETH problem, that's a everything retail problem. But when there's 25 layer ones, it's very hard to distinguish yourself from the others. The only metric that ETH wins out on is TVL, which, does that matter? Has that mattered? Hasn't yet. It hasn't yet. If we look at the ETH supply since the merge, it has gone positive, and this is the blob change down here, April 2024. Since then, it's been straight up, and it's basically ETH BTC chart inverted, right? As far as the supply is concerned. Now, this isn't to say this will be forever and this won't change, but it's hard to think positive thoughts until some fundamental changes occur for ETH, because otherwise, why would you want to touch the ETF when the chart looks like it does? I mean, there needs to be some reason and rationale somewhere, whether that be fundamental or technical. And I really don't see that here. So I wouldn't expect anything large on the flow side, at least not until staking. And even then, I'm not so sure that's going to be the silver bullet to ETH's problems either. Before we go any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with a link in the description of this video. Non-investment advice: crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures, Inc., PVI, DBA, and Kraken. For the past couple weeks, really, not too much has happened. We're still in this downtrend below 94K on BTC. This is a low time frame channel pitchfork situation. We might get the head and shoulders here, maybe not. It looks like it's kind of setting up for that. Do I have high conviction in anything here? No, I really don't. As it starts to get above 6 hour cloud, the channel, the pitchfork, if we do somehow get whatever inverted head and shoulders thing, monstrosity, Frankenstein's monster that this could be, we'll take it. But until then, I don't really think there's anything to do here other than just watch. If we're bearish, what does that mean? That means below 80, below 76 ultimately. Now on the high time frames, I guess there's two ways to look at this. So we're in a bear trend on low time frames. It would get more bearish, obviously, below, what is this, 80. Okay, that's not a secret. There's a yearly pivot there. Fine. The support in the bearish pitchfork sits low, right? Like 76, 73 and lower. I think it would take some serious anger on Legacy to get us there. Not saying it's impossible, but I think Legacy would have to be very angry. We'd have to see new lows. And the S&P, for example, get a full-blown 20% move down instead of the 10 that we have. On the multi-year pitchfork that we have on BTC, there is room for lower. And we're sitting on the first major support, which is the midpoint of the trend channel. So that's the level to watch. I mean, it's no secret. 80 certainly is an important level to hold going into April. And if we're above 80 on April 3rd, you know that we're doing okay. We can point to things like global liquidity, or the gold lead lag relationship or whatever, and we can say there are reasons and evidence to suggest and support bullishness here. But again, what's the conviction here? Is it high? Is it low? For me, I don't really have high conviction until I see what happens on April 2nd. So Pitchfork looks good on the high time frame. The low time frame, we know what to look for, as long as we're above the 4-6 hour cloud, as well as out of that Pitchfork. Should we bounce here, we are talking 110, 125, 30, somewhere in there into Q2. There's a lot of if this, then that until that happens. But that's what I'd want to see if I was trading this to the long side. The measured move here of what could end up being, but is not yet confirmed, inverted head and shoulders, would bring us to about 106, 115. So it really depends how this looks into Q2. Can't stress that enough. On the cloud, we are below the cloud. Bearish, fine, we know that. We're above the Tenkin, that's a good sign, the blue line there. The expectation is weakness here. The expectation is not we magically teleport to 125. But the more we can get back above the cloud like we did pre-election, despite all of the nonsense that happened leading up to that, then I can get much more bullish. I know what that means. I know what being above the cloud with the bullish TK cross, bullish cloud means. We're far away from that. So the silver lining there is we have no bullishness whatsoever. That's going to be super obvious if we see it. We can also just look at something like the 1050 cross. We are probably a week out from getting a cross here, historically on the daily. One of the simplest and easiest things to watch for BTC. So again, April 2nd, if we're above 90, that means probably we're above the cloud. That's a really, really good sign. What I kind of expect is getting some sort of relief rally into the low 90s and then selling off again mid-April to create the shoulder. If we're trying to paint the chart, just forever running back this it's so over, we're so back theme. So that's something to watch for. But that's down the road. So right now, again, I don't really see anything to do on any time frame for BTC. We can go with the hourly. I don't really think there's anything to do here either. Some excitement over the weekend, but your guess is as good as mine here. I think some people were drawing this as a rising wedge. You kind of see it with your eye there. Obviously, if you're bullish, you don't want to see that play out. That's also something to watch. Just this diagonal support right there. But that's about it. Not really much going on the BTC side of things. Ripple still has the head and shoulders. Can't shake it till it's above 285. It's clean. It's easy. Really nothing else to say or do there on that one. Still in the range. Sol popped up a little bit, but generally, what is there to do here? I don't know. Nothing. I mean, you could say, like I've said for the past 6 weeks, take a long stop loss, new laws. That's that. Like, whatever. Okay, fine. But I don't think really that there's any TA on your side here. You know, like maybe there's a TKC clamp. Maybe the bull div has confirmed and is starting to play out. You're hoping that this isn't a vanilla bear flag or pennant down here. On low time frames, I don't think we're above the 4 hour yet. No, not yet. But that would be definitely a key level to watch on Sol. Either 146 quickly or 133 next week. If we're here next week, it's a very good sign for low time frames on Sol. You can also sort of see a similar setup with this like inverted head and shoulders low time frame thing, neckline at 133. Very much seeing things, and we're not there. This is not a call. This is not a confirmed anything. It's just what do we want to see into the week? Some movement into 140s would be helpful for Sol. ETH, really same deal. Not really doing anything on its own, following the rest of the market. Sold off. What else is there to say, right? Not much has changed here. It's going to take either a considerable sideways consolidation or a massive move higher to like 2,600 to really get anyone's attention. At the moment, it's having trouble just getting over 2,000. Some of the others I noticed last week and today, the memes, for whatever reason, Bonk, Pepe, doing well. There's a trade setup I had on here. For Bonk, looks good on the daily. It's still in bear territory, don't get me wrong, but we liked it because it was above the 4 hour cloud. It's above the neckline here of any head and shoulders you might want to draw. So it's a bit of a diamond in the rough when there's not much else going on. Trump still down there. Significantly, I wouldn't touch that one with a 10-foot pole. Of all the coins, this coin, look, we called it last week, and here we are, right? It's moved from the neckline at around 33 cents to around 53 cents. I don't know why, but that's what TA is for. And peanut also on this list. Dare I say it, a Wyckovian accumulation here on this one. And if this is what exchanges become, is just meme coin trading, penny stocks basically, then it might mean the utility of all this stuff just doesn't matter, right? So I'd watch out for that one, but it's probably just people looking for something to do. In a time when we're seeing the majors sell off, it's easier to move the smaller market cap coins. On the legacy side, DXY, zooming way out, multi-year view here. Anything below 100, and we're golden, we're Gucci. On the crypto side, I'd expect highs easily as the dollar continues to sell off, if that is the case, but still stuck in the range there, not really much to do. The 10-year is starting to look interesting because if, like the dollar, this sells off, hopefully for good reasons and not recessionary reasons, not flight to safety reasons, then that should have ripple effects for liquidity and mortgages and debt creation on the long end versus the short end. But just the technicals on the 10-year yield do sort of hint at a little bit of a head and shoulders there. And it is at the bottom of the cloud. So if this can crack 415 at any point within the next quarter, that's the dream, along with BTC obviously above 90. I mean, it's DXY sub 102. It's 10-year at 415. And that's how we get to 125 on BTC next quarter. If we look at gold in the green here, global liquidity in the red, Bitcoin in the white, gold and global liquidity have matched each other more without a lead or lag. BTC tends to lag global liquidity by a little bit as it lags gold. Global liquidity at a bit of an all-time high up here. And again, it gets help from the dollar coming down. So all this stuff talks to each other. It may be a bottoming process here for BTC relative to the liquidity it's looking at, which would be back here. But to see rising liquidity is never a bad thing for BTC. And eventually it should listen. Gold in a vacuum starting to look a little weak. It doesn't mean it has to roll over to zero. It doesn't mean it has to sell off violently. It's just, is it a buy, sell, or hold up here? It's probably a hold or a sell, not a buy based on the daily cloud. These are the better buys, bullish TK cross, price above cloud. That's what you're always looking for in anything. Up here, you do have a bit of a bear div. If we had a pitchfork on this insanity, it still looks fine, right? It doesn't look overbought per se. It is in bullish territory. You could probably draw this pitchfork a couple ways. This looks fine to me. I don't really see any problem with it. You're hugging the midpoint most of the time. And that's what you want to see. So this div could keep going easily, but buy, sell, or hold here, not a buy for me. Would love to see some consolidation on the midpoint there. Looking at ES, this is S&P futures. Last week, the big hurdle was making it above the hourly cloud. You can just see it gets smashed down consistently. Since middle February, really. It just never looked back. Finally, we have bottomed out a little bit. This week's hurdle is going to be negating, invalidating this potential head and shoulders down here. Now, the head and shoulders police will tell you you cannot have a head and shoulders at the bottom of a trend. And I will tell you, it doesn't matter where it shows up. You clearly have 3 potential highs or equal highs here. And if ES breaks below 5660, BTC will not be happy with that. So if this can invalidate, that means great things for crypto and BTC. For leverage BTC, MSTR, also starting to get there. We're starting to make headway. We had a double bottom so far. We had a bull div that has confirmed so far. We had a falling wedge in here. We have a bear channel that we're still in. We're still below the cloud. We're still underneath the midpoint of the pitchfork. But as the stars start to align here into Q2, above 325, above 350, bullish cloud things, above the midpoint, that's what we want. So we are close. We're not there yet. This isn't a call. This is what I'm watching, what I'm looking for. I, like many people, have cheated this a little bit by starting to buy some 2 weeks ago. And I will just add as this continues to move higher. I don't think there's any reason to rush into anything on the option side or on MSTX or on MSTY or whatever. The target for this stuff is always and forever the top side of the pitchfork. It did it in March 2024, November 2024. Doesn't mean it'll do it ever again, but that would be the target. If we measure the falling wedge, that's also in the pocket of expectations. So there's a lot of stuff that has to go right for MSTR to double in Q2 and beyond. But it's starting to set the scene for a decent breakout. And I would argue it is leading BTC a little bit here. BTC doesn't look nearly as good as MSTR. It doesn't look nearly as good as WGMI either, which are the miners, Bitcoin miners. WGMI looks like a vanilla bear flag down here. Does not look good. But again, like any alt, if you like it enough, stop loss new lows, let it do its thing. It's already down 50% since December. Can it go down another 50? Absolutely. But this pattern along with the div is what I like here. This probably fails because miners aren't doing so hot generally, but I'll take a stab at it. It's very oversold and it may get a TKC clamp in here, but this is probably going to take 2 weeks till we get an answer on that if it doesn't just break down this week. Another interesting chart I thought I'd mention would be the low time frame coin chart, 1 hour. Clearly basically been bearish only since middle February. Maybe a little bit of a triple bottom situation going on down here. Clearly it tried something here that failed. Either this was a diamond or an inverted head and shoulders. This could fail, right? The cloud likes this either in the cloud or above the cloud or above 190. It's early. It's going to take time. It probably takes remainder of the week. Probably takes us into PCE at the end of the week, which I personally think will be below expectations based on the nowcasts and based on Trueflation. But if this starts to curl up, that's a good sign. Not quite there yet, but I like alerts around 189. I probably wouldn't trade this anyway, but from a TA perspective, that's where it starts to look interesting. Personally, I'd rather just fool around with MSTR than fool around with coin. Another chart that may look interesting, really not until probably end of Q2, would be NVIDIA. If we're bouncing around on the legacy stuff. Again, I'm looking for 2 or 3 things most of the time. If we're below the cloud, can this make an inverted head and shoulders or not with a neckline at 130-ish, whatever this diagonal is? Sure. Possible. It's got a lot of time, but I wouldn't touch this or force any trades on this until then. I really don't think there's anything to do there. And I know this had a lot of false starts at this head and shoulders where it broke down and then broke back up and then broke down, broke back up, and then I think that was DeepSeek somewhere in here, right? But this is why I like the Ripple chart. If I see this anywhere, I'm out. I don't need to take the trade anymore. I don't need to figure out if it's going to be an invalidation or not. You just wait to see what happens. So it would be hard to be bearish if you got this triple bottom on NVIDIA sometime into Q2, maybe even into Q3. It may take that long. Tesla's another one that a lot of people have been talking about for many reasons, but sticking to the chart, we do have a weekly tweezer bottom, something you rarely see to this degree on much of anything. This candlestick pattern confirms this week with a candle close above last week's close. I do not like the cloud position here on the weekly. It's in no man's land. It's above the cloud, below the Tenkan, but on a lower time frame play, sure. Not something I'm probably going to touch, but an interesting little thought experiment, an academic exercise on the TA side of things if this starts to pull up. Now, if this breaks to 210, 205, then this is in some serious trouble. So definitely one of the more interesting charts to watch throughout the week. And then on the relative value stuff, BTC versus SPY, starting to get a little bit of a bid here. You know, this looks better than the spot chart does. Again, if this can get above the cloud like it did, this was October, right? Now, as much as everybody says that S&P sniffed out a Trump win, the relative value chart clearly was bullish and ready to go October into November. So if we can see something similar in Q2, great, right? I mean, this was clearly bearish, in bearish territory until October. Same as expected here. If this is the double bottom or whatever this ends up being into Q2, great. But I would keep an eye on this and the daily cloud to see if we can get some relative value strength against the SPY. This is BTC against TQQQ, sitting at all-time highs here. TQQQ is the triple levered QQQ ETF. If this takes off against tech, then we are in the EM overseas international conversation of things that are not going down or are not stagnating like the Mag 7. And just as an extreme version of that, I like watching this chart, which has had an ascending triangle for multiple years here. So this has a bullish bias already, and it'll be interesting to see this year how much this can break out on the relative value pair. We've even got the BTC versus gold meme inverted head and shoulders. Now this is sort of broken down at this point, so it is what it is. But again, if we actually pull this off, if we double against gold, good night gold bugs. Sorry. Now you could say up until this point, you know, for multiple years we've been ranging, not doing much of anything. But if we double, triple, quadruple here against gold, which we've done before in 2021 and 2017, so it's not an impossibility, then we're in the big boy conversation where we start to drain assets just because everyone's watching the outperformance relative to everything else. And if you want to talk about draining assets, this is MSTR versus SOL, also at an all-time high. Doesn't look bearish to me. This is your alt season. It's MSTR, right? It's where people are going to get their fix on high leverage in a singular name that has a pretty loud spokesman. So this week I'm going to be continuing to watch the low time frame stuff play out on the S&P, on BTC. Sideways is a win. No new lower lows, much lower than 80 is a win. And we just got to sit tight until the beginning of Q2. That's all I got for this one. Like, dislike, comment, share, subscribe, and happy trading.